Our view on the global economy is a positive one for 2025. I think some of that is admittedly led by US economic growth, where we expect the growth impetus to be strongest. The economy is already in a good place, and a lot of the new administration's policies are growth positive. When you look at deregulation, you look at extension of tax cuts, and we think those, of course, will outweigh some of the potentially growth dragging policies like tariffs. I think challenges are a little bit higher when you look elsewhere in the world. Growth is arguably at a lower level in Europe, where we are seeing policy respond to that. And across parts of emerging markets in Asia, of course, it's a more mixed bag, with some economies like India exhibiting strong growth and others like China perhaps a little bit more moderate. But on balance, from an investor perspective, a positive view on economic growth in the US, we think is the key one, and that really is driving a lot of our overweight on equity markets. On geopolitics, I think it's important to look at each one on a case-by-case basis. The big event we're seeing today, of course, is the inauguration of the Trump administration, and a lot of attention short-term on what policies they might enact, in what order they'll follow it, and what exactly that means for growth and inflation. But I think it also helps to take a little bit of a longer-term perspective. Let's not forget that going back through history, elections you can discern an impact of elections on markets in the couple of months before and after an election. But beyond that, it's really the macro fundamentals, earning fundamentals that start to matter much more. And it's a similar story of geopolitical risks elsewhere. Newspaper headlines never fail to remind us of the risks that sort of are out there. But financial markets tend to have a much narrower focus, which is why for the vast majority of geopolitical risks, you tend to see a short-lived volatility impact on markets, but it's rarer to see a long-lasting impact. Usually diversified portfolios with an overweight to US equities, that's really the way we'd address the environment we expect in 2025.